Good morning, everyone. It's Chris from Solstice ATR as well as Axel ATR. You can find us on the website, Twitter, Instagram, as well as Discord. Remember, this is for educational use. We're not a broker dealer. Past performance doesn't give us any indication of any moves going up or down, but understanding the risk involved in getting into a trade. We trade side market, up market, as well as down market. Remember to hit the smash button, give us your commentary on YouTube, and follow us on Twitter. Let's go to the first slide that I have up here. I put in last week's video QQQ, which is the Nasdaq 100 electronically traded fund, and I put the measured move from the high to the low for the prior 2 weeks range. And I measured it. We got to the extension of 150 and 161 to the upside, and I did the Fibonacci retracement from high to low for last week's range. We hit the 161, got a little bit of consolidation on Friday. Inside day, we looked above, came back in, but we stayed a little bit positive. The most important thing, understanding the RSI, we are in an uptrend, but starting to lose momentum on the upper level on the short time frame. Let's go to the next slide. What I put the Dow Jones Industrial in relationship to the S&P 500. I put the different sectors in the Dow as well as the S&P to understand the risk and the weight that you have in relationship to the overall market. Pay attention to them. You can ask me about the regulatory, which are the electronically traded funds, which are part of the S&P 500. And once again, I will show you them to them. And this is the one reason I had put this slide up on the S&P 500. Has the stock market peaked? This is what we have to understand. Are we still in a momentum move up, or just getting around the corner after the election and everybody's being excited about Trump 2.0? Is the 2025 to 2030 going to continue in an upstream, or are we going to have a little bit fluctuation in between in relationship to the overall market? We're going to have, down market as well as up market, but the overall looks healthy. Are under Donald Trump, the Trump 2.0, which I'm going to call, are we going to get tax credits for the corporate as well as individual? And there are going to be less regulations in 2025 to 2030 in the corporate world and the overall global markets. Let's take a look at the downside risk when we had the COVID-19. This is the downside risk, how many bars we went down in relationship to the move back up. And the same thing in 2022. We had the October low. From October low to this high, we had 46.1% return in the market, and we had 55 bars. If we take the January low of 2024, we had 28.41%, and the gain was 45 bars going up from the beginning of the year. Can we come back to the 18 SMA? Yes. To the backside of this channel? Yes, and the 34. The 50 simple moving averages in yellow, and the 83 simple moving averages in purple, 116 is in orange. Can we retrace back half the move? Yes. Can we continue higher? But I think we are around the corner, getting a little bit overextended due to the, if Eric, everybody was excited about the election. We had the Federal Reserve Board talking about interest rates. They're going to do only quarter basis points from now till end of the year. And let's see what happens. Next but not least, this is the downside risk that I want to people to understand. From 1956 through 1968, we had an average 4.25, medium 10.5. From 1989 through 1999, an average of 10.6 decline and a medium of 9.3. In those 20 cases, the average was about 10%. Is it possible that we can have a drawdown? 75% of it in those 20 cases were 14%, in 85 cases were 20% drawdown. Remember, we are using this for illustration use. It's going to be determined along the way. We're going to trade what we see on the charts, not what we think. And I just wanted people to understand there can be a medium drawdown on a short term. Remember to check us out at Solstice, give us your commentary, and let us know what we can do to help you out. Let's go to the first slide that I had up here on the charts, and I put QQQ. This is the weekly showing the prior drawdown, and I'm going to use a pencil instead of a Fibonacci to show you how to use the drawdowns. If I take the last 2022 from the top to the bottom of that 1010, we had a 36.8% drawdown. Vice versa, let's just remove it. We're going to take the January low to the high of December in 2023. This was a 58.61% gain in the market to come back from the prior low. If you can see, we had a 36.3 decline in the QQQ from 2021 all the way down to the January. If I use it vice versa and I use the October low, this was a 37.79% drawdown. But if I take it from here to this peak, it took us 62.4 to retrace 100% of the move that happened from 2021 highs. And in order to run from October low of 2022 all the way up to here, we had 102% return. We have doubled that move from the bottom, 100% of it. So remember, we're going to trade what we see. Let's go now take a look at it, how I did it on the short time frame. I'm going to go to intraday. We did the 30 days, 30 days, 6 hour, I believe, on that chart the week before, and I measured the distances. So what we're going to do is take the high and low for the week, the measured move. This is the high week for the week, and this is the low on Sunday or Monday pre-election. I'm not going to take the Friday low, and if I extend it to the right, edit the property, and I extend it to the right, to the left, sorry, the right we already have it. I'm going to go to 10-1 just to show you how to do this. I'm doing it not manually. I'm just doing it by just using the machine, just reversing it back down. We know the retracement from high to low, 100% of it is in that area for that week. And this is the October lows, and this is the highs before the November run up. So if I take the extensions to the upside and downside, can we go up to the 180, 200%? Yes. Can we retrace 50%? Yes. Can we go back down to the bottom? Yes. But we're going to be not biased. We're going to pay attention to what the overall market gives us in relationship to the weekly charts, daily charts on a shorter time frame. This is why I wanted to show this move. And even if I took the Fibonacci from last week's high to low, I'm going to show it to you from last week's high to low. And this is the 161 extension that we had on the charts. So this is why I wanted to show you how we did it last week. This is the measured move for the coming week. Pay attention to the 50, the extensions to the 150 to the top, and vice versa to the 180 to the top, and vice versa to the 180 to the bottom. Remember, we trade what we see, not what we think. Let's go next to EY, and I'm going to use the ETFs first, and I'm going to put them on a daily chart, 1 year daily. We can see that this run from the low here to this high, if I measure it, that's quite a bit of return if we're going to do this together. Okay, let's just make sure everyone understand. This is the January low of 2024 to this high, to the peak of it. You can see that that peak, oops, wait just a little bit. Okay, they don't want, okay, let's just do it a little bit more than that. 1 year. We'll do it 2 years so everyone can see it. We're going to take the January low to this high here on the SPY. You can see that the total return is 28.56. Can it be possibly still continuation? Yes. Is there a possibility of coming back to the 18 simple moving average and filling this gap? Yes. And the 34 SMA, yes, or the 50 SMA where we broke out, we had that downtrend, we broke up on a gap. Pay attention to this gap. Are we going to get continuation to the upside or downside? We have to understand the risk involved in relationship to the overall market. Let's go take a look at all these sectors. I have the S&P 500 here. And we put on the short term we are up, but on the midterm we are a little bit on the downside, but the long term still up. The S&P 500 consists of the energy sector, consumers XLY, the energy is XLE, financial is XLF, utilities is XLU. We have to know the sectors in there. Material is XLB, consumer staples is XLP, real estate is XLRE, info technology XLK. Is the tech sector overheated right now? The healthcare is XLV and XLI. Telecommunication is XLC. I have the Mega 8, which is part of Apple, Amazon, Google, Facebook, which is Meta now, Microsoft, Netflix, as well as NVDA and Tesla. I'm thinking we're a little bit overheated on NVDA and some of the semiconductors and the tech sector in the AI. We're going to pay attention to the XLK. This is part of that sector in the technology. If I zoom in here, you can see when we pushed up in those last, we have this gap here. We have this gap from the election. We can see we double topped up here. Is there going to be continuation and breakout? Possibly. But if we fill those two gaps, pay attention to the overall sector in XLK. Let's take a look at the XLP. Oops, XLP. And I wanted to show that the consumer staples are a little bit in a downtrend. We can see we are in a downtrend. Even if I grab the uptrend here to this downtrend, we're still in a downtrend. We are in a open cone, whatever way you want to call it, or retracement of a Fibonacci downtrend channel in a linear regression downtrend. We had this uptrend that we broke below, coming back to retest the 18. I just wanted to show you that downtrend. I marked it on the charts to let you know how to draw it yourself. But we can see that we are still in that downtrend, but we are underneath the 18 SMA in that shorter period of time in that linear regression downtrend trend. Because if I consider these three, this is like a pitchfork translating to the downside on the short term. But the upside, we are in an uptrend, consolidated right at the breakout. You can see this area here. We filled this little gap here, which this candle tested, and we're trying to bounce back up. Very important that the consumer staples continue up. Let's now go to E-mini micro ES. I'm going to do the S&P 500. We had this measured move from the prior week, and I showed these levels on the charts. So what we're going to do, go to an intraday. We're going to use 30 days or 20 days, it doesn't matter. Are we going to go to 6 hours or 4 hours? They'll do the same job. I'll use this time the 4 hours. You can see that the measured move in Fibonacci's from the prior month. We're going to remove the drawing. We're going to remove this drawing. We're going to do it manually together. Remove that drawing. We know last week's range from high to low is here, which is the Sunday, Monday low. We're going to get the measurements from the high to low to know where our extensions are for the week, where my 20s, 80s, 150s, and 200 going up or coming down to trade those levels using an RSI divergence and understanding the risk. If I'm going to look at last month's range, I know the high was here for the S&P. If you look here, this is part of the November. So this is the high for the month, and this is the low for the month for, should be this one right here, the 20, Yep, that's it. So what we're going to do is go get the Fibonacci. In that Fibonacci, we're going to take the high to the low to know where my extensions are to the upside, where my 161 is. If I want to know the extensions to the upside, edit the property. You can see I have 161 here, but what I'm going to do, instead of the 161, I'm going to make it 1.5. You can see this. I'm going to make it in yellow. We're going to make a solid line. We're going to make it level 2 so everyone can see where the 150 is. The 261, I'm going to leave it. You can see the minus 261 here. I'm going to make it 1.382 Fibonacci. We're going to make it in, I believe we make these in orange color. And we're going to make it 2. And I'm going to push OK so everyone can see it. Can we retrace back to the 138? Yes. Can we continue and go above the 161 to the 178 and 200? Yes. But I want to make sure everyone understands there's a 23% here and there's a 14% here. Even coming back to this area is healthy away from the 18 SMA. But remember, we have the overnight gaps here on the E-mini. So we're going to trade what we see, not what we think. So I have the measured move in units of 20s and 50s, and I have the Fibonacci's in those units. So remember to use that. So micro, NQ, and the Nasdaq, and I'm going to do the same thing. So we're going to grab the Fibonacci from the high for the year to the low. And what I'm going to do all these for you on the upside as well as the downside. You can see that 161, I'm going to make it 1.782. We're going to make it in small purple, lighter line, and it's a unit in one. The minus 161, I'm going to make it 2. I'm going to make it in white, like every other one. I'm going to make it a solid color, and it's in unit in one. So down here, I have the 223. I'm going to make it 1.236, and that unit stays the same. The 261, I'm going to make it 1.382, so everyone can see it. And this is the units on the upside as well as the downside. I did not put the 50. We can put the 50 if you like, and this is the extensions to the upside and the extensions to the downside. Oops, we can see where it is in relationship to the overall market. So what we want to do is basically grab the right side, edit the property, and what I want to do is put the 150 for everyone. Since I don't have it here, I'm going to get rid of the 161. I'm going to put 1.5. We're going to make it in yellow, and we're going to make it a solid color. So everyone doesn't tell me, hey, we don't have the extensions to the upside in case there's going to be continuation to the upside or there's going to be continuation to the downside. And I'm going to trade the range on the monthly bars to the extensions to the top or the extensions back coming back to the downside. And this is how you measure the moves on the micro NQ in the S&P 500 as well as the Nasdaq. And if I want to do the measured move on the weekly, I'm going to grab the Fibonacci. Oops. I'm going to grab this. And what I'm going to do is, this is the measured move. I'm going to grab the high for, oops, that's the wrong one. It's right here to the low on Monday. And this is my measurements on the weekly chart. So if I want to do the monthly and I want to know where they are, I can change all these colors and make them into a flat color so everyone can see them. They are in gray, but the measured move is actually in units of 0 through 100, 100 to 125, 150, 180, 200, and vice versa, going minus 25, minus 50, minus 80, minus 100. So this is my measured move to the upside as well as downside on the weekly, what is expected because the move was very sharp and the excitement, of Trump winning the elections. We had that big move. Last but not least, I'm going to talk about Bitcoin, BT. Okay, we can look at micro BT, we can look at Ethereum, we can look at a lot of stuff. We had talked about it in September 9th as well as middle of September. Hey, pay attention in October. We're going to get a breakout in micro BT. What happened? We had that linear regression downtrend channel. We were zigzagging back and forth in W's and V's and M patterns, and eventually it created that W. Didn't make it to the top, and I said, pay attention to this area. There's going to be consolidation here for a breakout. We pushed up, came back, retested the breakout, gave you an opportunity to buy and not buy, whether you brought GBTC or you brought Mara or you brought Ethereum or you brought Bitcoin or the micro BT, and you got that push up here. You had a chance to go from 67,000 all the way to 77,000. That's 10,000. That's the 10,000 points in Bitcoin. Can Bitcoin continue higher? Yes. Can it do double standard deviation? If I take the distance between these two lines, the linear regression, and I duplicate it to the top, can it hit 85,000? Yes, but I want everyone to understand we trade what we see on the charts, not what we think. If you have gains in it, make sure to protect the 74 500 area, 74 300 as you stop on the overall range, because it can come back, retrace here, and bounce back up because you are in an uptrend on that linear regression channel. What we're going to do, we're going to draw this linear regression channel up here. You can see it's way down here. But if I grab one from here to here, this is my secondary for the upper trend, and I'm going to make it in orange or purple. We can change the color and make it just a little bit more dotted so everyone can pay attention to it before the major trend on that linear regression downtrend channel, which would be the 38%. Even if it comes back here, this is an opportunity to buy in Bitcoin. But if there's going to be continuation and you are in that trade to the upside from down here at the 65,000 range, coming up, rebuying this area, going higher. Make sure you have 74,300 as a stop in case it comes back. And if in case it bounced back in that area, add to your position and go higher. So this is what I want to talk about Bitcoin. But remember, in the SPX, if I put SPX up here, we put this chart up. What I wanted to show you on the weekly chart 3-year is that this range from the prior 2022, that dump from here, if I take the distance from here all the way up here, we have more than, let's just zoom it down so everyone can see it. We're going to put this mouse here to this high so everyone can see that there is 109 bars up from that area, and you have a 71.7% gain in the market. If I take the October low of 2023 to this high here, you have a 46% gain in the market. If I take the January low, which is this candle here, all the way up to here, we have a 28.41 on the charts gains. So remember, we're going to trade what we see. We are away from the 18 SMA, the 34 on the backside of this channel, as well as the 50 simple moving average, which is the open cone here. Can we retrace all the way back down? Yes. Can we continue higher? Yes. But pay attention to the RSI and momentum indicator so you are not caught on any side of the chart, and you're going to trade what you see, not what you think. And I'm going to do this 5 years to show you how it looks like on the short chart from February 19, the backside of the COVID, March 23rd, the rally consolidation, the December high, then the January low of 2021, continuing till 2022, then the reset in 2022 till October. Then we had an inside year. We basically gained everything back in 2023. Then eventually January was the rally back up. We had 28.41% gain in 2024, and we have 45 bars going up on the weekly chart on the S&P 500. I hope this video was very helpful. If you have questions, remember to check us out. Get in contact with us. Give us your commentary and let us know what we can do to help you out.